I'm transiting from the Department of Education, and my student number is 112102056. Now I'm starting my final video presentation. There are 3 questions in total, and let's starting question 1. Before starting our questions, let me give a brief background introduction first. On April 2nd, the Trump administration announced a series of tariffs described as reciprocal, ranging from 10% to 50%, imposed on nearly every country in the world. Taiwan's reciprocal tariff rate was initially set at 32%, but was subsequently reduced to 10% for a 90-day probationary period. During this period, the Taiwanese government must negotiate the final reciprocal tariff rate with the Trump administration. So, what is a tariff, and how about a reciprocal tariff? A tariff is a tax imposed on importing goods and services. It's typically used to protect domestic industry from foreign competition or to generate government revenue. A reciprocal tariff, however, is a specific type of a tariff where a country imposes tariffs that mirror or respond to the tariff level set by another country, aiming to create equal or even reciprocal trade conditions between the two nations. So how will this reciprocal tariff directly affect Taiwan's exports to the United States? The reciprocal tariff will make Taiwanese goods more expensive in the U.S. market, so it will reduce the demand for Taiwan's exports in the U.S. markets, and in the end, it will decrease Taiwan's export volumes to the U.S. How about the Taiwan's imports from the United States? If Taiwan also imposes reciprocal tariff on U.S. goods, the imports from the U.S. will become more expensive, so it will also decrease. Next, what is the nominal exchange rate? The nominal exchange rate is the price one country's currency in terms of another's. For example, if the rate is 30 NT dollars divided by US dollars, it means that $1 can exchange into 30 new Taiwan dollars. And how will the nominal exchange rate be affected by the reciprocal tariff? Let's see a diagram first. Like the diagram shows, the tariffs will reduce the demand for Taiwan's exports to the U.S., so fewer U.S. dollars flowing into Taiwan. In Taipei's foreign exchange market, the supply curve will shift left because fewer U.S. dollars supply into Taiwan. So in the end, the NT dollars will depreciate against the US dollars. And will the new Taiwan dollars appreciate or depreciate as a result of reciprocal tariff? As what I said before, the new Taiwan dollars will depreciate relative to the US dollars. This is due to the increased demand for US dollars in Taiwan and potentially reduced demand for NT dollars in the US. So how will this reciprocal tariff directly affect the US net export? The reciprocal tariff will likely increase US net exports in the short run because US import Taiwan's goods and the price becomes more expensive, so it will reduce import quantities. And U.S. exports to Taiwan might increase if Taiwan doesn't impose counter tariffs. However, this ignores the potential retaliation and long-term effect, so it only will affect in the short run. Next one, what is a real exchange rate? The real exchange rate is a nominal exchange rate adjusted for price level difference between two countries. It measures the relative price of domestic goods compared to foreign goods. At the bottom is the formula we use often. And how will it be affected by the reciprocal tariff? Also, let's see the diagram first. In the U.S. foreign exchange markets, the tariff makes foreign goods become more expensive. This will reduce U.S. demand for foreign currencies, so the demand curve will shift left, and in the end, it will result in the real exchange rate decreases. Okay, the final part. Will the reciprocal tariff actually improve the United States net export as Trump expects? I will talk about short-run situation and the long-run situation. In the short run, it will significantly improve the trade balance. However, tariffs reduce both imports and exports due to retaliatory actions and reduce trade balance. So the global supply chains are disrupted, leading to inefficiency. So in the long run, if tariffs persist, the domestic industry may become more competitive, but at the cost of higher price for consumers and lower efficiency. Let's move to question 2. As it stands, I will talk about brief background introduction first. Our 2024 Taiwan Computex NVIDIA CEO Jason Huang said that Taiwan is now at the center of AI. This statement was rooted by the significant increase in Taiwan's semiconductor exports to the United States and other countries in 2024. NVIDIA and AMD, two global leaders in data-related technology, announced plans to establish overseas headquarters and R&D centers in Taiwan. Additionally, many foreign investors purchased shares of TSMC. As a result, Taiwan's economy experienced substantial growth in 2024. So first, how will the increase in Taiwan's semiconductor export to the United States and the rest of the world affect Taiwan's real GDP and overall price level in the short run? Let's see the graphic first. As the export component of aggregate demand increases, the aggregate demand curve will shift right. Real GDP will increase due to this high net export, and the price level will also increase as the aggregate demand curve shifts right in the short run. So what type of investment is the construction of overseas headquarters and R&D centers by NVIDIA and AMD? This is a foreign direct investment. In other words, is physical capital investments by foreign firms. And how will this construction affect Taiwan's real GDP and overall price level in the short run? Let's see this diagram. Because the investment component of aggregate demand increases, so the aggregate demand curve will shift to right, as this shows. So the real GDP will increase due to high investment, and the price level will increase because aggregate demand curve shifts right. So what type of investment is the purchase of TSMC shares by foreign investors? This will call the foreign portfolio investment. It means that foreign company buys financial assets, for example stocks. It's not real physical capitals. So do I expect this type of investment to directly affect Taiwan's aggregate demand in the short run? What impact will it have on Taiwan's real GDP and overall price level in the short run? No, I don't expect that this type of investment to directly affect Taiwan's aggregate demand in the short run, because a foreign portfolio investment does not directly shift aggregate demand in the short run. It affects the financial account of the balance of payments, not the spending side of GDP, so it won't directly shift the aggregate demand curve. And so it won't have any effect on Taiwan's real GDP and overall price level in the short run. But however, indirect effect may exist, like higher TSMC stock price could increase consumer or firms' confidence, so it will possibly boost the consumption or investment over time. If Taiwanese government takes no action in response to the AI-driven economic growth, how will Taiwan's real GDP and overall price level change in the long run? Let's see this diagram. The aggregate demand curve will shift right first because of the investment and the net export. However, if the government takes no action, the short-run aggregate supply curve will shift left by itself. So the economy will turn to a long-run equilibrium to this point E2. And the price level will be permanently higher due to initial aggregate demand increase. And the real GDP will return to its natural level. If the Taiwanese government is concerned about an overheated economy driven by AI boom, what type of fiscal and monetary policy could be implemented to cool down the economy? For fiscal policy tools, I'll think about reduce government spending or increase taxes. These two actions will decrease aggregate demand curve and reduce consumption investment. So the result is the real GDP will fall and the price level will stabilize or decline. And for monetary policy tools, I think about the raising interest rates. So the higher rates will discourage borrowings and reduce consumptions and investments. So the result is the aggregate demand decreases and it lowers the real GDP and price level. Next is question 3. And the brief background introduction is the opposition party in Taiwan Legislative Yuan has cut various government spending proposals submitted by the executive yuan, where the ruling body argues that these budget cuts will harm Taiwan's economy. The opposition claims that they are helping the Taiwanese people by saving public money. So how will these budget cuts directly influence aggregate demand in Taiwan? How will change in aggregate demand affect real GDP and the overall price level in Taiwan in the short run? Let's see this diagram. So the budget cuts will decrease the government spending as G components of aggregate demand. So the aggregate demand curve will shift left. So in short run, the real GDP will decrease and the price level will also decrease. Do you expect a multiplier effect to result from the decrease in government spending? Yes, a multiplier effect will occur. The initial decrease in government spending reduces incomes, which then reduce consumption, further decrease the aggregate demand. Because the multiplier arises because one person's spending is another person's income. How will these budget cuts directly affect public saving? What will be the effect on demand and supply in Taiwan's loanable fund market? How will the real interest rates, private investment, private saving, and national saving be affected? Let's see the diagrams. So while the saving the S-curve will shift to right, it's because the public saving increases because government spending decreases. So in the local funds market, the supply will increase and the real interest rate will decrease. Private saving investment will increase and the private saving may decrease due to lower interest rates, and the national saving will increase because the public saving increase and the will bigger than the private saving decrease. And based on analysis in question 3, what happens to Taiwan's net capital outflows? The net capital outflows will increase because the higher national saving makes more funds available for foreign investments, and lower domestic interest rates make foreign investment relatively more attractive, so the net capital outflow will increase. How will the change in net capital outflow affect the supply of new Taiwan dollars in the foreign currency exchange market? Let's see this diagram. As what I said before, the net capital outflow will increase. So the net capital outflow increase will increase the supply of new Taiwan dollars in the foreign exchange market. So the real exchange rate will depreciate. So it means that it will lower the volumes of new Taiwan dollars, and it improves the trade balance. So the net exports will increase. How will these budget cuts indirectly influence Taiwan's aggregate demand? The budget cuts will decrease aggregate demand overall because of the 3 points, and we'll just talk about the indirect effect point. The indirect effect via the loanable funds market and the foreign exchange market. The lower interest rates may decrease the investment as positive for aggregate demand, and the depreciated currency may increase net exports. It's also positive for the aggregate demand, but the direct negative effect will likely dominate in the short run. So here's the end of my presentation. Thanks for listening.